All right. Looks like we are live. I'll make sure my audio is working clearly here. Make sure the setup is correct. All right, cool. Hello, everyone. Welcome to the show, Milton's Briefs. Apologies for being a little bit late here. Just catching up on some important things I needed to do. So we have a lot of news to cover today. Not a ton of headlines, but very important key headlines. And some things, well, the first thing I'm going to say right now is breaking news is that the government shutdown has officially ended pending the signature by President Trump. The House voted on a government bill to fund the government. I believe it's until January, mid to late January. I'm going to look to verify this right now. But it passed in the House today. We're going to look at this right now. Yes, so it's breaking news right now. The House passed, the government funding bill, and by a margin of 222 to 209 House Representatives. Now, let's see, I believe... let's see. So this legislation will fund the government until January 30th and provide funding for some government agencies for the remainder of the fiscal year. Now, one of the reasons I think this government funding bill is only until January 30th is because Republicans in the Senate promised Democrats they will hold a vote on healthcare subsidies in the future in December. And the thing is, there's no guarantee that's going to happen, but I think the Democrats have some leverage here in that they potentially may hold out of more funding for the government in late January if the Republicans do not hold a vote on healthcare subsidies and actually pass it. So that's one key issue right here, because just because you hold a vote, doesn't mean it's actually going to pass. So that's what makes this a little bit confusing. Why Senator Chuck Schumer, the minority leader of the Senate, would even agree to this, but that's another point here. And again, this is Minority Leader Hakeem Jeffries expressed strong opposition to the government shutdown. He's the leader in the House of Representatives for the Democrats, stating, quote, that the funding package that the government, the fight is not over. We're just getting started. We'll fight today. We'll fight tomorrow. We'll fight this week. Okay, so he's going to fight for the American people. Okay. And he's talking about the healthcare premiums that will likely go up a lot starting next year. So that's breaking news, and I'll get into those details probably in another video, probably in January when there's more information onto what's next with the government funding. But as of right now, the government shutdown is ending imminently, pending the signature of President Trump, which he's likely to sign since he stated verbally that he agreed with the bill that just passed today. So that's one of the biggest news that I want to cover right away. Next is AMD, which is Advanced Micro Devices. Lost my train of thought there for a moment. Rose as high as 10% today because of very high optimism of funding and revenues from data centers in the next 3 to 5 years, and announcing tons of money and investments in artificial intelligence, which I'll get into in a moment. Next, according to I believe a member of the Fed, yes, the New York Federal Reserve President, John Williams, the Federal Reserve will start its quantitative easing cycle and lean away toward quantitative tightening. And for those of you who don't understand those two terms, quantitative tightening, which is what has happened since the beginning of the year up until the last couple of months or so, is when the Federal Reserve raises interest rates or keeps interest rates steady and buys less treasury bonds so that borrowing costs are not going down, but it remains steady or up a tick or so. But now the Federal Reserve is going to start buying bonds, lowering interest rates, stimulating the economy because the job market isn't doing too hot, really, due to the multiple private reports that have come out from ADP and another agency that I don't recall the name of it off the top of my head. And so there's lots of news regarding that. So we'll break that down as well. And then thirdly, Epstein document drop. So recently, there were several files of the Epstein files that were released, and it mentions the president in that message, in several of the emails. And of course, it's alleged. We don't have complete evidence of it, but it's just something that I think is important for Americans to pay attention to, especially because it has so many implications, not only in politically or just in the news regarding President Trump's approval rating and all that, his public standing with the American people, but also due to the potential rise in Democrats taking over potentially the Senate, as well as maintaining a stronger majority in the House if there's negative implications in these leaked documents that are coming out for the Epstein documents. So if all this news interests you at all at any point, please like, share, subscribe to this channel, comment your thoughts below. I'd be happy to react to your thoughts and react to any specific news that you'd like me to cover in any type of way. I'm open book. I'm open to criticism and open to any thoughts you have. So let's start with the news of, I already covered the government shutdown. So let's start with the Federal Reserve. So like I said earlier, we are heading toward a quantitative easing cycle, which does not only include cutting interest rates, but the Federal Reserve actively buying Treasury bonds at a very high rate. And we're going to get into this right now as to what Mr. Williams is predicting here. So let's see. John Williams reiterated on Wednesday, November 12th, 2025, that the time is getting closer when the U.S. central bank will have to restart bond purchases as part of its technical effort to maintain control over short-term interest rates. Williams, in the text of a speech to be delivered to a conference at his regional Fed bank, noted that when these purchases happen, they have no implications for monetary policy. He did not comment on the outlook for short-term interest rates in his prepared remarks. Quote, the next step in apologies for that. The next step in our balance sheet strategy will be to assess when the level of reserves has reached ample. It will then be time to begin the process of gradual purchases of assets that will maintain an ample level of reserves as the Fed's other liabilities grow and underlying demand for reserves increases over time. So what does that mean? When the Federal Reserve continues to purchase bonds at a higher rate, so they continue to purchase more and more bonds, this is going to put upward pressure on prices, especially on inflation, because they're going to have to cut interest rates because they want to purchase more bonds at a lower rate. So ideally, they're going to cut interest rates, and that's what we've been seeing in the last FOMC meeting, and we're going to see that very likely in the next FOMC meeting. Not a guarantee, but it's very likely to happen. And to me, this is what jumped off the page, in my opinion. This sentence right here. So quantitative tightening has allowed Treasury and mortgage bonds owned by the Fed to run off and not be replaced in a bid to remove the sea of liquidity that was added on during the COVID pandemic. Okay, that wasn't the quote I was looking for specifically, but when I was reviewing this article before, maybe it was from a different article, but he was basically stating that the Federal Reserve may return to the rate of quantitative easing that occurred at the height of the pandemic to stir up the economy, the jobs market, especially with how many reports we've seen of massive layoffs occurring, Americans struggling to find jobs, even many Americans that are turning to seasonal work due to not being able to find work in the last several months. And so it's definitely a concern that the Federal Reserve would even consider purchasing or even doing quantitative easing at a very high level, because that is how we got such a high inflation rate of over 8% back in 2022. Everybody was celebrating the low mortgage rates, this and that in 2020. And sure, if you were in that position, you lucked out, because we very likely won't have mortgage rates at 3 to 4% again. Or if we do, it'll be a very, very long time if we see that in my lifetime. But here's the thing, the difficult measure of scaling this market out is that if we return to that sort of quantitative easing, there's no guarantee that mortgage rates will fall, because we actually see mortgage rates dip a lot but then spike back up. So even if mortgage rates do fall, home prices are still going to go up. The price of goods is going to continue to rise because of the inflation. We've seen this happen. We've seen this when, after the quantitative easing cycle back in 2020, home prices have gone up. I believe I saw a statistic, don't quote me on it, but it's gone up about 50% over the last 3 to 4 years. And homes were somewhat affordable, still expensive, obviously, but somewhat affordable before the pandemic. And then during the pandemic, and then a couple of years after, all of a sudden it spiked up due to corporations purchasing homes and raising the prices, purchasing at a very high rate and raising the prices on everybody. And that's a whole breakdown of a story for another day. But you understand my theory with this, where I'm going with it. So this is why it could be really dangerous, in my view. So I think this could be a big problem, and it just goes to show that this is how the American government solves debt and solves its problems, by spending more money. They want to continue to spend and spend and spend, and they're able to do this. They're able to control the interest rates. They're able to control the monetary policy off a whim, because they are a fiat currency. It is the world reserve currency due to its spending power in the military, especially, but also because it's not backed by something of value. So when the dollar was backed by gold in the past, the government would not be able to just instantly print as much money as at once in any given period of time. And now they can do that. So it's really over the last 50 to 60 years, and since the 1970s, I believe, when the dollar got off the gold standard, we've seen this shift in monetary policy that has changed a lot. I don't know what that noise was. But anyway, so yeah, that's how we've seen a lot of change in that. So transitioning off of that headline, let's look into AMD. So one of the stocks that really rose, that really helped the Dow rally a lot and hit a new record today, hitting 48,000 for the first time ever, is AMD, or Advanced Micro Devices. And it surged 7% today. I saw a stat that went up to 10% at one point. Maybe that was pre-market. But the reason that happened is two things. One, the chipmaker unveiled a bold $100 billion, that's right, billion dollar plan of annual data center revenue targets, with plans to claim a larger slice of booming AI market dominated by NVIDIA, its big rival. So that's one of the biggest reasons. So they're putting their chips all in with artificial intelligence, which is one of the reasons why the S&P 500 has hit so many records since Liberation Day on April 2025. We've seen the stock market rising and rising due to many tech stocks such as NVIDIA, Palantir being a growth stock, or I believe it's a growth stock. Don't quote me on that, but Palantir, NVIDIA, Intel went up a little bit due to the Trump administration investing heavily into it. And so that's what we're seeing right now. Tech stocks are leading the market, and we're seeing all these companies, including Apple, making deals with Google to create a program within Siri, software within Siri, so that in the spring to summer of 2026, Siri is going to have ChatGPT-like artificial intelligence on your phone, on their devices. So all these companies like Meta, all these companies are going to spend lots of money on artificial intelligence because they understand that is the future. That's the future of what technology looks like. And so it's no surprise to me that AMD went up instantly when they unveiled a plan to boldly invest billions of dollars into data centers, because that is how, when you're putting more money in data centers, you're putting more money in technology for artificial intelligence. So that's number one. Number two is that they laid out its 3 to 5 year plan that would not only show investing lots of money into artificial intelligence, but they're reporting that they are more likely to triple its earnings for an analyst day in 3 years, which is huge. And then not only that, but the CEO, Lisa Su, stated that the data center chips could swell to $1 trillion. $1 trillion by 2030. And obviously that got shareholders very excited, and that's why the stock went up. So it's really fascinating. And they've had a lot of, they had conversations with OpenAI. They've done certain deals like that, and they're really getting into this race ever since this year. And we're seeing that right now as AMD has gained over or about 97% this year, and it's up 16% since October 6th. So they understand what investors are looking for, and they're pushing all their chips toward artificial intelligence generation, innovation, etc. And this is one of the reasons they're planning to develop these two systems right here in 2026. And I believe I saw, maybe it was, I wish I remember the company name. I think it was, might have been Oracle, but I may be incorrect. Man, of course I don't remember the name off the top of my head. But there was one company that rose a lot because they were planning on releasing 2 chips in 2026. I don't think it was AMD. I think it was another company. So a lot of competition for these chips. So that's one of the reasons why it rose a lot. So let's see what this Yahoo Finance video covers regarding this.
Man to talk to about this, Patrick. So here's what AMD CEO Lisa Su says. She says the total AI chip market is going to reach $1 trillion, that's with a T, by 2030. I guess let's start there, Patrick. How much of that market do you think AMD can really take long term, Patrick? I know AMD will lay out their bogeys, but what does the Patrick Moorhead take?
Yeah, so just to be clear on that number that they put out there, that's a combination of the addressable market, and I think I would refer to that as the SAM, right? It was CPU, GPU, networking, and accelerator. And I don't see any reason why AMD can't get to double-digit market share there. The big question is what percentage? And it's going to be a combination of CPU, where the company said, basically came out and said, hey, we're going to get over 50% in server alone, and that includes ARM-based variants as well that are growing. But I think even more important, a 60% CAGR on data center revenue, and then an 80% CAGR on data center AI. I think, given Lisa Su and her conservativeness, I think they've gone one stop short of giving. Well, what percentage of double digit? Is that 20%? Is that 30%? And in reality,
I'm shocked that he's a conservative. Honestly, that's crazy.
We don't know, and AMD doesn't know, because we're talking about products that are coming out, the more competitive products versus NVIDIA in the third quarter of 2026. And these numbers, this read was also a very conservative over the next 3 to 5 years. And that's a lot of time in AI time.
Do we, when we're talking about those AMD sort of next gen AI chips, Patrick, do we have line of sight there? I mean, can we try and compare and contrast those AI chips with what NVIDIA is offering?
This is a great question that the host asked, because I think there's so many. They're saying they're developing these chips and those chips and this and that. And even when I try to research it, like, there was one company that was releasing new chips, and they claimed that their chips are going to be more energy efficient than NVIDIA's chips. So they're going to have more. Basically, long story short, they're going to need less electricity to have more power with artificial intelligence. But that's the most that I found, because there's not a lot of data released on this. So I'm really curious what this analyst has to say.
Yeah, so there are some architectural comparisons, and I'll try not to get too nerdy here on the show, but there's an architecture called scale up, and scale up means you can address a lot more GPUs. AMD is at 8 right now, and it's looking at scaling at 72 to 144, very similar to where NVIDIA's Blackwell is today. And that matters because it adds performance and capabilities, not only on the training side, but also on the inference side, to have much lower cost per token. And at least on paper, there's an architectural equivalent between AMD and NVIDIA in what Lisa said is the third quarter of 2026. The talking points that I had heard so far had been second half 2026, but it looks like we now have a third quarter, so a little bit more refined of a date there.
That's really interesting. So it looks like AMD is really going to be in tight competition with Nvidia right now, which is, I think, it's so important to analyze all these companies because there's so many different tech companies. Everyone looks at Nvidia as the AI chip gold standard of stock and all of that. And again, I'm not taking anything away from Nvidia. Of course, they've earned that spot because of how much they've dominated on the worldwide scale. But at the same time, that doesn't mean that we can ignore everything that we've seen when it comes to AMD, when it comes to Oracle, when it comes to OpenAI, etc. All these different companies. So yeah, I think that's something that we need to cover here for sure. So I had to cover those news. And as we can see right here, looks like the S&P futures are ticking up because of the House passing the government shutdown bill, or ending the government shutdown, and that will fund the government up until January 30th of 2025. I don't know, I already went through this. I'm just going to see if there's anything else really going on here. So it doesn't look like any other breaking news. President Trump should likely sign this either late tonight or tomorrow morning. He'll probably sign it tonight, though, I'd imagine. Yeah, and then of course the airlines have been a mess ever since this bill, or the lack of a bill passing. Air traffic controllers have been paid, so there's been a shortage of them. Many of them even retiring early because of this, and also over 40 million Americans not having SNAP benefits due to the government being shut down, and that's going to cause a lot of issues. But it looks like this article is claiming that they will have relief, so it looks like that will be funded. So that's a good thing. But one thing that's really fascinating is that this report is stating that October jobs and inflation data are unlikely to ever be released. The White House says they don't want to release this information. This is to me the most frustrating thing with any administration that does this, because this right here, you're playing politics. You have the data right here. You could easily release it to the public, have investors react to it. And clearly when I see a report like this makes me think that they want to just hide bad news. Honestly, because from what we see from the private data, the private companies, jobs reports, and everything like that, it's been really bad news. And I have a feeling, of course, it's just my opinion, that these reports have negative things to say about it. So that's part of the reason why I think that they don't want to release it, which is pretty bad in my opinion. It's just not good to play politics when it comes to government data, finance, things like that. So definitely disagree with that, but we'll see if that changes, if there's anything that will be released, if there's any legal requirement or anything like that. So anyway, another news, since we're on President Trump, let's get into basically what we learned, what's happened. So there's been a Epstein documents release that occurred. Believe it or not, of course, nothing's really been released for a long time, but there was a document release today that occurred, and the president was in those files. So we're going to just analyze some of the things some of the statements that were made and that mentioned the president, and we're going to go from there. So there's several emails here, so let's check this out. So I'm not going to say it completely because the YouTube doesn't like that. Basically, the offender, Epstein, specifically referenced his relationship with the president in writing before Trump was elected in the office in the run-up to 2020. And as you can see right here, 2011 is the email right there, clearly way before he was president. The emails, some of which were shared directly with PBS News, are among 23,000 separate documents from Epstein's estate released to the committee. Ranking member Garcia wrote in a news statement. So this is 23,000 documents that were released. And this is why, for all Americans, everybody should be looking into this, looking into the character of their politicians, anything that they've done, anything dirty, anything like this. I think it's so important for people to do their research. Don't take anyone's word for it. Just find the source and read about it, because I think it's so important. So let's see. So from Epstein to, looks like that's Ghislaine right there. Quote, so here we go. I wanted to realize that the dog hasn't barked is Trump. And of course the victim's name is what's the word? Redacted, which obviously is a good thing. So the victim spent hours in my house with him. He has never once been mentioned police chief, except I'm 70% there. So, okay, so I wanted to realize that the dog hasn't barked is Trump. So he's basically saying right here, looks like that that Trump hasn't told the police, hasn't told anything about this, has kept this on the low, even though he has knowledge of what's going on. This is pretty big news, and this was sent on April 2nd, 2011. So again, 2011, about 5 years before he was elected president in his first term. This is so fascinating. First of all, I love that there's not too much article, like opinionated or anything written. I love that this website, and I encourage you all to check this link out, that this just shows the emails and you can come up with your own conclusions from yourselves. So here we go. A email, I'm not sure who this is to, who's Michael Wolff. Let's check that out real quick. I'm sure it's someone pretty obvious. Okay, so the journalist who emailed Epstein. Okay, so he's a journalist. So he emailed Epstein about Donald Trump. Interesting. He's a journalist, longtime journalist. Okay, let's see what this is about. Let's see if something comes out of this. So looks like I'm not sure who Jay is though. But anyway, so victim Mar-a-Lago. Trump said he asked me to resign. Never a member ever. Of course he knew about the girls as he asked Ghislaine to stop. Okay. So he asked Ghislaine to stop. So that would be a good thing technically. But at the same time, if he knew what was going on at Epstein's place and didn't report that to the authorities, that's a huge red flag, obviously. And again, these are all leaked, and there's nothing that has strong confirming evidence as far as pictures of the president being with Epstein, so we can't have anything definitively. I'm not saying anything definitively, but again, this is all concerning news. Wow. And this one right here so this is from the journalist to Epstein. Okay, so that's Epstein's email. Okay. So that's what the journalist said. I think you should let him himself. If he says he hasn't been on the plane or to the house, then that gives you a viable PR and political currency. You can him in a way that potentially generates a positive benefit for you, or if it really looks like we could win, you could save him generating a debt. Of course it is possible. Jeez, man, this is crazy. Man, this is heavy. This is heavy stuff. Okay, this is interesting. So let's see what this Sky News has to say about this.
One from 2011 to his co-accused Ghislaine Maxwell reads, I want you to realize that the dog that hasn't barked is Trump. A victim, name redacted, spent hours at my house with him. He has never once been mentioned. Police chief, etc. I'm 75% there. Ghislaine Maxwell replied, I have been thinking about that. Epstein emailed the writer Michael Wolff about a Trump media appearance. The author replied to him, if he says he hasn't been on the plane or to the house, then that gives you a valuable PR and political currency. You can hang him in a way that potentially generates a positive benefit for you, or if it really looks like he could win, you could save him, generating a debt. On the congressional committee investigating the Epstein affair, Trump's political opponents say it's political dynamite.
Our leadership here is implicated in the largest sex trafficking scandal in the history, not only of the United States, but potentially in the planet. And so this email, especially the 2011 email from Jeffrey Epstein to Ghislaine Maxwell, directly references Trump. It directly talks about how he spent time with one of the victims of his sex trafficking crimes at Jeffrey Epstein's house.
Donald Trump was a friend of Jeffrey Epstein.
That's wild. That is wild.
Before they fell out. The name redacted from the new emails was unredacted by the Trump administration. They named her as the late Virginia Giuffre, Andrew's accuser. This was a White House standing by their man.
These emails prove absolutely nothing other than the fact that President Trump did nothing wrong. And this email you refer to with the name of a victim that was unredacted now and has since been reported on in this room, so I will go ahead and say it, Virginia Giuffre. She maintained that there was nothing inappropriate she ever witnessed, that President Trump was always extremely professional and friendly to her.
Survivors of Jeffrey Epstein have long demanded a full release of relevant files for full public scrutiny. A lawyer fighting their case gave her latest views on the latest developments.
The emails are from Jeffrey Epstein himself, pointing a finger of accusation at Donald Trump, really from the grave.
Among 20,000 documents newly released, Andrew Mountbatten Windsor appears to get a mention. In response to a newspaper planning to run a story on Epstein, his actions and associates, someone called The Duke emailed Ghislaine Maxwell and wrote, "Hey there, what's all this? I don't know anything about this. You must say so, please. This has nothing to do with me. I can't take any more of this."
I wish I'd never met him in the first place.
The documents appear to show Lord Mandelson, former US ambassador, was in touch with Epstein in 2016. In November that year, Epstein emailed him, writing, 63 years old, you made it. Mandelson replied, just, I have decided to extend my life by spending more of it in the US. Epstein.
Yeah, it's pretty gross stuff, man. Gosh. So yeah, this is a lot of people are reporting on this, and it's really good. Encourage you all to look into this, and I think only more things are going to come out from this. So I know that's not technically finance news, but I just had to cover that because I think it's really important for all Americans to understand what's going on with this corruption and everything like that. Okay. So moving on from that topic, let's see if there's any more news. Those are the three biggest headlines I wanted to cover for today. Let's see if CNBC. I think they might have had. I think they had something that I wanted to cover. If I'm not mistaken, because affordability is really low. Oh, House Speaker announces vote next week to release on documents. Okay. Okay. Yeah, so we can cover those two. And of course, I know how dirty Donald is. Pretty strong words right there. But yeah, it looks like this is the main things for today. Yeah, looks like this is everything for today. I'll check the YouTube channel for Bloomberg real quick to make sure I didn't miss anything. They usually have really good content as far as news and things like that. So we'll take a look at that. Okay. Oh, yeah. So Trump was planning to have dinner with Jamie Dimon and Fink and more. This is actually really interesting because I think this is one of the reasons why the Dow really shot up, because
President Donald Trump is hosting Wall Street's top leaders for dinner at the White House. Sources telling us here at Bloomberg
trying to pause that. Some of the biggest banks in the country, the biggest bank, JP Morgan, but also a couple others, I believe. Let's see. I guess I didn't write it down. I could have sworn I did. Guess I didn't. But it was JP Morgan, American Chase, and I think another bank, potentially Goldman Sachs. These three were the biggest banks that really had high earnings, or excuse me, not high earnings. Just a higher growth in the stock today. And I think it's due to the president announcing plans to meet with them. And yeah, so this is pretty interesting news here.
That JP Morgan's Jamie Dimon and Goldman's David Solomon are expected to attend. Bloomberg's Jack Fitzpatrick is tracking the story. Jack, what's the objective of tonight's dinner?
So there's no listed objective, but there's a broader context to consider here that the president hinted at in those remarks. This is a president who put a huge amount of political capital into getting his signature tax bill extended, and yet he sees major concerns among the electorate on affordability, on jobs. There was some pressure on him to the degree that he focused on foreign policy, taking his trip to Asia during the government shutdown. This is a president who clearly feels some pressure to refocus on the economy as much as possible and sell voters on the economy, on the tax cuts they've gotten, and on any success he can. So there's not an official agenda for what he's trying to accomplish, but he's certainly brought forth some high-profile names as you see him shift his focus a little bit away from the recent attention on foreign policy and back to the economy as his bread and butter.
Yeah, so I'm not sure exactly what they're going to talk about, but yeah, this is fascinating. Yeah, so I think that'll be the end of this video.
How is the U.S. economy right now? How do you see it?
Actually, let's cover this. Let's cover this video, and then we will close off.
I think the U.S. economy is just okay. It's not great. I think recession is remote, but it's a little bit squishy. So it feels as though businesses and households are still struggling a little bit with tariffs and the ultimate impact to cost of goods.
First of all, I have to say, this kind of sounds out of touch when I immediately, but that's my first reaction to this, because we see in the report that I covered yesterday, 1/3 of Americans, of low-income Americans, are struggling with and living paycheck to paycheck, and this is not something that would happen in a okay economy. So I had to push back on that immediately.
I think that's a headwind. Certainly, the government shutdown hasn't helped with sentiment, and of course, the Fed has highlighted for a while that interest rates are a bit on the restrictive side. And I think all of those things are conspiring to take a little steam out of the economy right now.
The labor market part is what I'm really interested in hearing from you. Absent government data for a couple months, what's an accurate view of the strength of the labor market right now?
So the government data is one thing, but you and I both work in franchises which have ungodly amounts of data. We use that. We look at the Chase data. We look how the consumer is performing. The consumer looks okay. Deposit balances look okay. We're seeing big ticket purchases starting to tick up a little bit. But of course, all of that is concentrated in the top quintiles of earners. From business.
I like how he said that right there. It's the upper income Americans that are spending more of their money. I saw a report on things like Chipotle and Kava, and how these food items that were commonly purchased by low to middle income Americans are now over 50% of the sales are from upper income Americans for something like Chipotle. And then there was reports that many Americans were skipping breakfast and not going to McDonald's, not getting something quick from McDonald's for breakfast, and they were losing revenue on that. So this is not just an okay economy, in my opinion. I think these are recession highlighted red indicators. Now, the thing is, he's not going to say that because the data doesn't literally show a recession, but these are indicators of a pending crisis that could be coming very soon. In fact, sooner than later, in my view.
This is our equity and credit analysts talk to literally hundreds of businesses a day. And what we're hearing there is they don't feel an urgency to do any hiring. They're in pause mode headed into year end. And of course, that would weigh on the labor market.
I want to bring into something that, and forgive me if I mispronounce it, Gregory Dacko, he's chief economist at EY Parthenon Daco, and he says the economy remains resilient on the surface, but it's increasingly dependent on three narrow interconnected A pillars: affluent consumers, artificial intelligence fueled investment, and asset price gains, and talks about how they're connected, right? We know the wealthier consumer has been out there spending, they're responsible.
First of all, I love that the two statements right here, affluent consumers and artificial intelligence fueled investment, those two topics right there is one of the biggest reasons why the stock market has been rising and breaking records day after day this year. And it's due to affluent consumers or affluent investors investing thousands of dollars, hundreds of dollars, thousands of dollars, however you want to put it, into the stock market and making big returns. And this is why the economy looks good on paper, because of the stock market. But when you look at the broader data, which we don't have access to, we don't have access to the September jobs report, we don't have access to the October jobs report, but even the reports before that, where we saw in the summertime huge revisions of hundreds of thousands of jobs in the Bureau of Labor Statistics report, and then President Trump going out and firing the commissioner of the Bureau of Labor Statistics and hiring somebody else, and then the next report was still negative anyway, so it didn't really matter. You understand my point, though. These are all bad signs before the government shutdown. These are all not great signs of the economy. And even if the economy is resilient and consumer spending is resilient, I would argue that at least right now, it's more resilient because the holidays are coming up, because many Americans are traveling to see family members, purchasing gifts, buying more food for eating bigger meals and anything like that. So that is sort of my opinion, not based on data, but just my opinion.
For really a big bulk of consumer spending that goes on in the US. But if the AI spending boom, Bob, is not, if there ends up being a little bit of a bust, a big bust or something, or we start to talk about, right now we're talking about the spending and on balance sheets and, you know, whether or not we're going to have to kind of replace these items. They're not going to last forever, whether it's chips or what have you. But what if we see those asset prices come down? The affluent consumer doesn't feel so affluent. They stop spending. Does all of this start to come undone?
It could, but I think we have to remember we're a month and a half away from the One Big Beautiful Bill Act hitting. And when you look at the One Big Beautiful Bill Act and think about the tax refunds on tips and overtime and Social Security payments, where are most of those? Those are in the bottom couple quintiles of earners. So you're going to get some relief there. You think about the Genius Act and a lot of things that are happening there, you're going to see some spending there. And
I have to push back on that too, because the One Big Beautiful Bill Act very largely disproportionately benefits the ultra wealthy of those making at least $300,000 or more, and not the middle or lower income class. In the beginning of the bill, it does benefit the lower and middle income class, but over time, it's actually a very large redistribution of wealth up toward the 1%, and it's away from the lower middle class and transferring wealth to the upper quintile percentage class. So I had to disagree with this gentleman's perspective here. Again, he's not wrong. There is tax refunds on tips. There are tax refunds on social, or not refunds actually, but deductions on Social Security, things like that. But again, there's limits to that. There's limits to how much deductions there are with tips. It's not unlimited. So everything you have to take with a grain of salt here.
One thing nobody's really talking about right now, which we see on the horizon, is deregulation. It's certainly going to come to financial services. It will likely come to other industries as well.
Well, that makes me think about, and we weren't going to talk about this till a little bit later on, but we do know that President Trump is hosting a little soiree with a bunch of financial executives. Jamie Dimon's going to be there, at least according to reporting or people who have been briefed on the event. Is that what they're going to talk about? The regulatory environment? Have you talked to?
I'm so glad she brought this up, because a lot of the other video I saw didn't cover this. Like, what is the president going to talk about with them? What is actually going on? You know, this is Great question.
Jamie, about this? But if you were sitting down with the
when I looked at some of the attendees, I suddenly thought, boy, there's going to be one outspoken bank CEO there.
Rhymes with.
I'm sure they're going to do a lot of listening. I think they're going to be a sounding board for a lot of things, the things that have been mooted in the market recently, $2,000 payments that go out, checks get cut, 50-year mortgages, maybe not, maybe you just take your mortgage.
Which would be a nightmare because that would be hundreds of thousands of dollars more of interest that is owed to the bank. Man, that would not be good. And then those $2,000 that he's talking about is those checks that President Trump was claiming that would come from the tariff revenue that the government made due to the tariffs to try to stir up more. And I think that's to stir up more positivity, more approval of those tariffs. That's why I think he wants to do this. But at the same time, he didn't propose this to Congress, so I don't believe it's going to happen. If he proposes it to Congress and it passes Congress, then that's the only way it's going to happen. Just as the COVID stimulus checks occurred back in 2020, it had to pass through Congress, through congressional approval, and then those checks were mailed out. We haven't seen this with the Doge cuts, where the president was lofting this idea, and we're seeing this again with the tariff checks. There's no congressional proposal about this, and yet if there is, I'll happily change my mind and approach on this topic. But for the meantime, this is just a load of BS right now.
With you, I think this is going to be an administration that will bounce things off of them.
Yeah.
I think it will be one that will ask them, what do we need to do to unleash big banking, big business? Are there other things that can be done? And I think there's going to be a group there that will be pretty free-flowing with the information.
For what it's worth, Caroline Leavitt at the White House was asked earlier this afternoon about the 50-year mortgages. She said the administration is seriously looking into 50-year mortgages. I do want to go back to the
Would
AI
you buy? Would you recommend investors buy
a 50-year mortgage?
Wait, which side, Carol, are you talking about? Like someone buying a home?
Become an investment.
I got taught very early there's no such thing as a bad bond, just a bad price. So it depends on where it gets priced and the features in it.
That was funny. Okay. And that will conclude the episode for today. Again, please... There we go. Again, please like, share, subscribe to the channel, comment your thoughts below, and give a like. Share this with friends and family. Really appreciate all the support. And I will see you